Hello guys, welcome to Sniper Sundays. I hope you're all well and I hope you all had a great weekend. Apologies for the delay with this. It's actually the fourth time I've actually recorded Sniper Sundays now. I know it like the off by heart. I've said it so many times, but I'm going to go through everything just as I did on the first recording and in even more detail. Just going to go over everything that I for the week. And first off, I'm just going to start off with last week I explained that I'm sort of expecting a big week this week. And what we're expecting from this week is the big swing trades that I've been talking about. The trades where we're going to be looking at taking them. Once we get into these trades, holding them for a long time. A little bit like Aussie dollar, Japanese yen. This is a nice trade here, guys. We took this trade. We've been holding this for just over a week. You can see a nice 200 pip move to the downside. Now, some of these trades that I'm looking at, for instance, like Euro USD here, for example, I'm looking at taking a long trade and holding for a long time. This is similar with many other pairs. So we've had a choppy sort of January. We could continue to have a little bit of a choppy week this week. As we're waiting for these swing trades, it might take a little bit of patience, so we might have some intraday trades before that. I mean, the reason we might be choppy this week is obviously because of the fundamentals. Now, the fundamentals, there's been a lot of fundamentals this year so far. We go to USD CAD or even Euro USD where we're here. We had the fundamentals where at the start of the year I called the short from here to actually come down to where we are now. We took the short trade. But then we had some fundamentals where the US and Iran situation. So we had to take some profit early because we don't know what was going to happen in the market. So we've had that's happened. We've had the problem in Libya, which affected the oil trade. We've also had the problem in China, which we currently have. So we've had a lot of external fundamentals, and I say external because it's away from the economic calendar that we normally look at. And so there's been a lot of external sources of fundamentals hitting the market. So this week is going to be a busy week, and I think it's going to be a lot of movement in the market. We have to be very, very careful to keep our risk management very, very tight here. Reason being is because of this situation. So I recorded this before obviously the market opened originally, Sniper Sundays. And talking about this situation here in China with the virus that the outbreak of the virus, the coronavirus in China, this has obviously had a big effect on the market last Tuesday when we first learned about the virus. The virus has got progressively worse. It's not got any better. So what can we expect everything to continue that happened last week? The effect that we saw in oil, the effect we saw on Japanese yen. If the situation's not got any better, sorry, excuse me guys, I'm actually not feeling too well myself. But if the situation's not got any better, obviously we can't expect a change in the markets. So for instance, this has got worse. The total deaths in China has now climbed to 80, which is really quite shocking, really, really bad. This is a big, big problem in the world, and obviously it can break out to other places in the world. So it's a big, big problem. This is having a massive effect on the market, guys. And this is something that we haven't ever seen before in the market, but we have to understand how this can affect the market, in what ways and why. So if we just go to oil. I just covered this in the morning call, which I've done again, but I'm just going to cover this in more detail now that we're going to take some more time and just run through this. Now, last week on oil, we were looking at this reaching the third point on the trend line. Now, if we just think back to the start of last week on market open, as I said, we had the external fundamentals of the problems in Libya, and we had a nice long trade on here. And on market open, we actually gapped. We had this gap here. We gapped up, hit a point of 2%, and everything was running nice and nicely for us. Then we came back down, and we hit stop loss at break even. No loss, stop loss at break even, which shows you never know what might happen in the market. It's a perfect example. No one can predict an outbreak of a virus in China. This is why you have to have your stop losses at break even and your risk management covered at all times. Because we had that outbreak and we saw price push down. So we were out at break even and oil continued to push lower. things got worse over the week. Things got worse. Not a direct, a complete reason why oil dropped, but we know that it was affecting oil. Things got worse over the week, and we came down to this point here. Now at this point here, I had lots of you message me, which is fine. Yeah, ask questions. That's what we're here for. You saw this morning star formation, 4-hour bullish engulfing, and was looking at a possible long trade. Now my answer to that was that there was no trade on here just yet. And why is that? Because like I always explain, if we're this close to a trend line, see this gap here? If we're that close to a trend line, we will 19% of the time always tap it. Price is a magnet to these trend lines. It will always come out and reach these trend lines and tap these levels. Even if we pull away slightly here, as you can see, we had this pin bar. We might pull away slightly, but price will come out and tap them. Now on Friday, we did tap that level. We did tap the trend line for the third time. So now what else have we got to think about? We've got to think about time of day, sessions, and then obviously price action and everything else that we need to look for, technical analysis. But to take a trade here on a Friday afternoon, in any time of the market during the year is very, very risky. Now, we don't rush into trades. We've got to take all things into account before we take a trade. We think, okay, what can affect our trade? We always need to be thinking, what can affect our trade if we place a trade? We know that if we take a trade here on a Friday afternoon and we're going into the market over the weekend, anything can happen. Commodities are highly driven by fundamentals. Oil, gold, supply and demand, and also fundamentals. Now, taking a trade on here before the weekend is absolute suicide because of the reason of what is going on in the world right now. We know we've seen a big drop off because of the news. The news hasn't got any better, and we're going to go into the weekend and have 2 days where things can get worse. And to open up a long trade here, as I said, is absolutely crazy. That's why we stayed away, and that's why we haven't touched oil yet. It has pushed down now, big gap to the downside. Since Friday, we've actually dropped another nearly 200 pips, guys. 200 pips. So we wouldn't want to be on the wrong side of that. But it's at 200 pips to the downside, and we're now reaching around the $50 to $51 region. You can see here. So watching out for this. I think we could dip down a little bit lower, dip into this level, round significant psychological level of $50. We could dip down to that level and then find support, but staying away from this at the moment. But you can see the effect that the news from China is having on the market. So going back to so we've got to keep an eye on this all week. More news on this could come out at any time during the week. Back to our normal economic calendar, we can see today there's some small news from Europe coming out, nothing too major. Tuesday, we've only high impact news is some consumer confidence from the US. Wednesday is fairly quiet. We've got Aussie dollar news coming out, and then we've got the FOMC statement and FOMC press conference coming out in the afternoon. That can take an effect on the US dollar. So during the day, not too much. Then Wednesday afternoon, we've got the FOMC meeting. Thursday, we've got sort of the biggest news of the week. GBP news, Bank of England monetary policy report, official bank rate. Should this change for what is expected, we could see a big move in the market, and we have some US dollar news. And then Friday, we got some China and Canadian dollar news. So not the biggest week fundamentally on the economic calendar, but we know we got this news that can affect us at any time. Now, what I was explaining on my last Sniper Sundays is, I'm just going to move this over to the side for a minute. It's something I want to explain. I think we can actually talk about this on a webinar coming up shortly, but I want to explain it now. And if you take this on board and use it for trading, it will help you massively. I've explained this before, and I'll explain it again. We can imagine price moving up like this, price moving back down, and then price moving up, and we think it's reached a high. As I said before, 90% of the time, price will never hit that point and move back down like that. Most people feel like it will. Most people feel like they're going to miss the trade. So what they try and do is they try and pick the top, or they try and pick the top here, and it'll keep going up. Pick it here, it'll keep going up. Pick it here, it'll keep going up. Pick it here, and it's gambling because they never know where the top actually is. We have to establish where the top is. I said that will hardly ever happen. Very, very rare we'll hit a point and just pull away straight away. What will happen is price will come back, make what can be a higher low, higher high, higher low, higher high, higher low, and it will come back up and either make a Fibonacci retracement, say 38, 50, 61.8%, or it will make a double top. 2 points, any 2 points make a trend line. 2 points also make a resistance. So you can see here, now that we've made 2 points, we know that this resistance is holding strong. Then what we'll probably see is the market push back down again. So we now know this resistance is holding. Many times, third time, golden number in trading, we might come up and touch it again. We might even spike a little bit higher, but then pull back down below and come back down. And then we push back up again. And we can see this happening. Sometimes it happens on a 1 hour, 4 hour, daily chart, or even weekly. But this area here is, what's it called, guys? As many of us know, it's called an area of consolidation. Now, what I like to liken this to, well, let me just show you exactly. So what happens here many times, guys, is, as I said, people try and pick a short here, and then even though they're correct in the long term, because they jumped in too early, they'll get stopped out with the spike higher. Some people will wait for the push down, the bearish push down, and then take an entry here, and then they'll get stopped out. Or even if you have this here, you have a nice stop loss, but you could, what ends up happening is you're in profit, you're in loss, you're in profit, you're in loss, you're in profit, and this ruins your psychology and how you're viewing the market and how you view the rest of the market as you're looking at trades, because you're stuck in a trade going up and down, up and down, up and down. You don't know what it's going to do next. Now, understanding that this area will happen 90% of the time will teach you to have patience and to understand to take your time with the market and not try and jump in. Understand that this will always happen, nearly always happen. We'll have a pullback, we'll retest resistance, and you want to see this retest resistance. You want to see price reject these levels to show that this area is an area of resistance. And as we're waiting for this, we might see that spike up, and many of the times we can take a short trade here, that sniper entry, take it down. Optimal trade, small risk, huge reward. So what I like to liken this to, guys, I mentioned this before, I talked about this at the event as well, I've mentioned it before within the group, is try and imagine a rocket. Imagine a rocket here, let up into the sky. When a rocket goes into the sky, when it hits the top, it doesn't just hit a point in the sky and then come all the way back down. What it does is it sort of starts to drift to the side, has this little bit of a moment where it's just airborne, moving sideways. Then it starts to come down a little bit, and then all of a sudden, boom, we come down fast. This area here, this airborne moment, is basically consolidation. This is what happens in the market, guys. And then the same will happen down here. We'll have the similar situation here, where the market isn't just going to go bang, it's going to move sideways a little bit. Have that airborne moment, and then might start to come up. Or might even keep pushing down. Maybe it's going to reverse. It's going to have that little area where then it's going to move up. So see here, it's waves, guys, waves. Not point to point to point, it's waves. Market moves in waves. You have to have that, understand it moves in swings and waves. This is what you have to understand with trading. And when you do, and you understand you don't need to rush. You're not looking at taking a trade. Okay, yeah, we've hit support. Bang, let's take a trade now. Let's go. No, because then you're going to be stuck in a trade for days or weeks. You have to wait for the right time. Wait for the price action. And that's why we take trades right at the perfect time. Just like our Aussie dollar Japanese yen trade that we took a week and a half ago. We took it and we didn't have one pip of drawdown. We literally took it at that point where the market was about to turn, which was here. And it just came down, bang. No sitting in a drawdown. No sitting in a consolidation, taken at the perfect time. Now, why am I talking about this so much this week? I say, guys, excuse how I may sound. I am feeling unwell. Now, why am I talking about this so much this week? Well, the reason being is because I said about how we can expect swing trades this week and what we're expecting from the market. We may have some intraday trades before the swing trades, but we're expecting this pair, Euro USD, to come up and have a swing trade. Going off the back of what I just said, what can we expect? An area of consolidation and an area of that airborne moment, an area of consolidation or just a mid-drift. We're going to need some patience to take the trade. Now, weekend has happened. Retail traders want to jump in. Excuse me, guys. I'm really not feeling too well. Retail traders will want to jump in and take a trade straight away. That's where most will fail. If it is going to return around from here, what we're going to see is price sort of move sideways, have a bit of consolidation. Remember, we never know how long that consolidation is going to be. That's part of trading. But what I teach with price action will teach us, and then we can look at taking that long trade. So that's what we're going to be watching out for. So a little example of that, guys, on the chart is here. See when we hit this support, 1, 2, 3 on a daily chart. Let's go down to the 4-hour. See when we've hit this level here, we haven't just hit it and pinged away. You can see here we've had this area of consolidation. Here, we've had this area of consolidation. See, if we go back to the daily, you can see how that shows up on the daily chart. We don't just hit a price, hit a level and just move away straight away. We'll have this area of consolidation. Area of consolidation. Up here, even up at these levels, we have this sort of area of consolidation. So this is what we can expect to see from around this level. I'm going to be looking for this area of consolidation this week and be looking for a trade on Euro USD. And I'm looking at a possible swing trade all the way back up to sort of these highs. Now, reasons for that is because from the US dollar index, I can see the US dollar selling off or having some weakness. We're also coming back down to this level where we had pinged off the 61.8% once, twice. Could come down and tap that again. We push this up to this side here. We've now from A, extreme low, to extreme high. Because this fib wasn't completed, see here, we had B, we had a C retracement, but we never hit D. Now we're just up this slightly to this B here. So we've got A, B, and then come back down, and we could be hitting this C retracement here. So this level is going to be very, very interesting. And then if we do hit that level, we may be creating the next higher low, because the last higher low is here. So as long as we stay above that point, we are still in an uptrend on this daily trend, uptrend, higher high, higher low, higher high, higher low, higher high. We come all the way back up, a couple of 100 pips, 200-300 pips above this previous level here. That's what we're going to be looking out for, a possible swing trade coming up. Now, reason I've used that example to show you about the rocket and so on is because it's happening in a lot of pairs at the moment. It's also something which I'm going to explain is very, very important whenever taking a trade and some later pairs. So Euro GBP, we've also seen here that we've come down and tapped 0.8400. I called this level from the tip top here. Didn't take a trade because never got the right entry, but I was expecting it to come up and tap 0.8600, just failed. I said 90% of the time we will tap the levels. This is one of the 10% times that it didn't hit that 0.8600, the round significant level, which was quite a surprise. However, we did push all the way down to 0.8400, and we tapped that level now. Reason why I've been looking at that level is this beautiful Fibonacci that we've got on here. See this 61.8%? We've tapped that level. Now, watching here, what can we expect to see from here? Just as I explained, it's going to be an area of consolidation. I'm watching this carefully. Yes, we've had this ping off this level, 4-hour, very, very nice, 4-hour pin bar, but it's too soon to be looking at taking a trade on there just yet. We're going to have this area of consolidation. It's Monday morning, or market's just opening, so we're going to watch how this reacts around here and be watching price action in this level to be looking at taking a long trade. I do think this is another swing trade that we'll see back up to here, a couple of 100 pips to the upside, but first, price is going to fluctuate and consolidate around here first. So I'm going to be watching that this week and be looking for a possible long trade to the upside. Euro JPY. So this pair has been pushing down. Japanese yen pairs are hard to call right now, guys, because of the situation with China. We saw, that, especially with Aussie dollar, Japanese yen pairs and other pairs, that with the news dropped off last week from Tuesday when the news came out about the virus. And we've now broken down and come down into this support region. Now this support region I have highlighted is from here the support here to this support level here. But most importantly is also round significant level 120. Remember, round significant levels are very, very important in the market. We will normally come out and adhere to them and tap them. So you can see here, we take that away, we come down to this 120 level. Now this can continue down lower because of the situation with the Japanese yen. I'm going to be watching this at the moment, can't really say too much else on it. We have to let the market continue a little bit more. It has just opened. We might see a little retracement from here, but at the moment you can't call it yet, because as the world wakes up after the weekend and the markets wake up, we could just see a continuation a little bit lower. So I'm going to come back to Euro JPY. Euro AUD, so on Sniper Sundays originally, we were just saying, I was explaining that this was just very, very choppy. We're stuck between these sort of daily trend lines. We are now, however, coming back up to try and break out. We've seen a very weak Aussie dollar, as predicted. And this is going to be very, very interesting to see whether this can sustain this breakout today. We're going to be watching this breakout and see, after all this time, are we able to break out of this sort of choppiness that we've been in for a long, long time? This pair has been very, very choppy. You can see through here, look at a daily chart, been very, very choppy for quite some time. So I'm going to be watching this carefully today to see how we react and see if we can sustain this push. I'm expecting Aussie dollar to perhaps turn around as well from this push down. So this is quite interesting to see how we continue to act here. Can we continue to break out and hit the second point on the trend line? This will be the first target, so I'll be watching out for this one. Euro NZD, this is another one I'll be watching out for. For those who are new in the group, we are still holding a short trade from here, running about 4 or 5%. And I've just mentioned this on the morning call as well, that we had third touch on the trend line. Now, before the market opened, I've been wanting to watch out for signs of this pushing back up to the upside. Explained that here we've not broken below the 78.6% Fibonacci. Now, when we do not break below or close below, we have broken below, but we haven't closed below. See the body of the candle? As long as we close above the 78.6%, it means that this Fibonacci is still valid. So we haven't been able to break down, and we're finding support. The third touch on the trend line, 78.6% support, and we can look at this pair pushing up. However, market open, we've already seen a gap to the upside. We've already seen this huge gap. So we're going to have to stand aside on this one for the moment. We see Aussie dollar and New Zealand dollar is weakening, just as we expected. We're seeing a push up to the upside. We do have this daily trend line coming across from the top. We know we're in a strong daily downtrend with our short trade from the top. And yeah, we're just going to have to keep an eye on this one this morning, guys. It's jumped before we could even look at taking a trade. We did have some nice 4-hour movement on the trend line last week, but being a Friday afternoon, again, with Aussie dollar, New Zealand dollar being highly affected with what happens in Japan as well, because Australia is highly linked with China for export-import situations. We're seeing a weakness on it here, so we couldn't be taking a trade on a Friday afternoon where we don't know what could happen. EuroCAD, a lot of Canadian dollar pairs are sort of in a range of consolidation. Here we're seeing, the reason I'm looking at this, guys, is on a daily and weekly chart, we're at a strong level of support here that we're failing to break lower. However, I'm just keeping this one on my sort of watch list because it is at this crucial level, level of daily support. But at the moment, it's not too interesting for us just yet. We're continuing to fluctuate between this range, but just notice this range here and how we are continuing to just fluctuate between it. Using this range tool is very, very important to understand. Just want to look back on something. Yeah, I'm going to just go over something shortly. So yeah, using this range tool is very, very important to understand, which we're going to get to shortly. GBP USD. So I've been explaining, I expect GBP USD and GBP pairs to have a push up higher before having a sell-off. We've seen a bit of a sell-off on Friday, but I don't think this is going to be the big sell-off that we're looking at for just yet. I think we're having a little bit of a pullback. We could see a little push up to the upside, one more push up to the upside, and then from there we could possibly look at the bigger short down to around 1.2750. But in order to do that, what we normally need to change the direction of the market is some fundamentals. Now we have broken out to the upside. Going to adjust this trend line, but we can see that pound has been quite choppy. Since we had the election news where we had that big push up, we can see pound has been quite choppy within this area. Now, in order to get out of this choppiness, in order to get out of these levels, I'm expecting the fundamentals some fundamentals to give this a bit of a kick to really get things moving. So what I'm expecting is this to continue to push up once more, perhaps push up to here, take out the previous highs, and from these levels then we might see GBP USD push down. So I'm keeping a close full watch eye on this at the moment, guys. Keeping a close eye on pound. I do like pound to sell off. I do like pound to weaken, but we need something to really give it a kick to make it weaken. Now we do know that we've got pound news on Thursday coming out, and on Friday is the 31st of January, which is in fact the day that the UK leaves the European Union. Something could happen this week, we don't know, but also next week, the following week, is we're going to see lots of news coming out from the UK on plans for the Brexit, for the exit deal. So pound may just fluctuate a little bit more this week until that bigger sell-off. GBP JPY, we've seen a little gap here, but we're back down to the bottom of this range. We could possibly see another push back up. But again, this is a Japanese yen pair, so we have to be careful. So we're just going to keep a watchful eye on this one at the moment. But again, I would like to see a little push, a last push up to the upside before a sell-off. But if we do see the sell-off first, then we will take it. At the moment, you can see here, rejecting that 50% retracement. Could have one more push up to the 61.145 level. If we did, that could be a great level to take a short trade. If we can take a long trade up, we will. But keep a close eye on this one, guys. It's, as I said, any Japanese yen cross is a hard one to keep an eye on or to predict at the moment, given the situation with the current world events. Now, GBP AUD. This one's really interesting for me at the moment. We're seeing a big push up here. So originally, what we saw on this pair was we had this left shoulder, head, we had this right shoulder, and we pushed down. Now, on the daily chart, price is continuing to push up higher. You can see here, support, 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 support. We're pushing up higher. But what's interesting here now, guys, is obviously we're having this sell-off on the Aussie dollar, and I'm expecting the Aussie dollar could turn around and we can have a big swing trade. But we're coming up here and we're tapping into the 61.8% level and towards the 78.6. Now we just take this away. We can see here at the 61. We can see here we've had this previous daily resistance here, but we can see here at the 61.8% we've got 1, 2, 3 candlesticks that are rejecting this level. Now today we've actually opened up. I didn't think it would push up so much. I was looking at seeing some more resistance from around this level, but keeping an eye on here. We could be taking out these previous highs before a push to the downside. So I'm expecting pound pairs to have a little last push up to the upside, like I explained with GBP USD, but perhaps we might not see this, so we need to keep an eye out on it. Same as GBP JPY. However, GBP AUD, I'm going to be watching this pair very, very carefully. See here on the 4 hour, we're rejecting the 61.8%. We may be taking out the previous highs here, and this is where something I want to explain today, along with what I just told you about the sort of airborne rocket situation when price moves up and down and the waves, is something that you see me use a lot, and I mentioned before, is this range tool that I use. Now, similar to what I said about when price moves up, people will try and take a short trade too early. So when price moves up here, people will see a few signs and they'll try and take a short trade early, like here, try and take a short trade. Now you can see that you would have got taken out, or your stop loss would have been hit now, as you can see here. Also, what people then will try and do is pick the top. So you see this bearish engulfing, and then take a short trade from there. So once the bearish engulfing's been here, they'll take a short trade, stop loss above, and even bigger loss. Bang, price has moved back up one more time. You see me use the range tool an awful lot, guys. So I'm going to explain both of these in the next webinar about the range tool, and we'll talk about the price action of picking the tops and bottoms and how it works. But remember, having patience is the key. So, and combining all of this and price action and everything together. So when we make a high here, we know that price is going to come back and make a low. So like I said at the start of the video, price pushing back up to the upside. 90% of the time to retest that resistance. So you can see here we've got this area, we've got this level of resistance that we're now coming back up to test. So we're going to watch and see if this could hold, whether it's going to be a strong area of resistance and whether we could possibly take a short trade. Now when it comes back down and makes a higher low, we can use this as a range. So now you can see we've got a bit of a range here. Made a high, came back down, made a higher low, and now we're pushing back up and hitting and trying to break out of this range. If we have a strong close above like this on the 4 hour as it is, or a strong close on the 1 hour, we can expect more upside. But if we were to pull back down and spike down back below this resistance, we can possibly look at possible short trades. So from here now, for instance, if you just wait and we do see a spike to the upside, you could possibly take a short trade from here and ride this one down. So you can see here, by not jumping in too early, we can wait for price to react and see if it's going to react to resistance. If it doesn't and it breaks above, we know that it's good to be patient, and we'll wait for the next move up, and we'll wait until this finds its next area of resistance. Now I am going to keep a close eye on this one. I do think that GBP AUD could have, if we do pull back down from here, that we could see a push back down. I said I do like GBP pairs in general to have a sell-off, and I'm expecting a turnaround on Aussie dollar perhaps later this week as well. So if the two happen, we could see this push down and we could see a big sell-off on GBP AUD. So this is on my watch list, top of my watch list. If we do push down, we could come down from perhaps a 1, 2, 3, 4, 5th point on the trend line, and if that should break, then there's loads of downside momentum that could enter the market. So watching this one very carefully today, guys. But see how we use that range, creating a high, creating a low, and boxing it off, and using that to our advantage. USD JPY, this one I'm sort of staying away from at the moment because it's a Japanese yen pair. USD JPY has been very choppy in general the last few weeks. We had as we're pulling back down on Sniper Sundays, I was looking at two areas of support. We had this one, but I used this one. Why did I use that one? Because it was around significant level. See over here on the right hand side there where we've got 10900. See how price likes to come down to the round significant levels. Now we've dropped below that a little bit. I said hard to call this one just yet with the market just opening. So I'm going to stand aside on USD JPY at the moment. We have come back down 100 pips, tapping the 10900 level. Not much to really say. You can see it's quite messy and nothing really too clear. So we're going to stay away from that one at the moment. USD Swiss, one that we've been looking at for a while, possibly some upside movement. Looking at this because we've got this daily support here, had daily support here, double bottom, broke through, had this morning star formation on the daily here, and we dropped down to the 4 hour. What you can also see here, we just box this off. We've got this sort of support here and this resistance. So you can see we came down, made a support, came back, made a resistance, came back down, retested resistance, even star formation, pushed back down to the bottom of the range. At the bottom of the range, we're now being able to break back up, and it looks like we're close to the top of the range. Watching how this reacts for the rest of for the next few hours, next few days. See if we come back up here, we push back down one more time. If we do push down, we might be able to take a short trade down. We push down to here and find support, we might see a nice trade up. Who knows? We'll have to keep an eye on this one. But we're watching this fluctuate within this range. USD CAD also had a range box out on this one as well. With this pair, we're quite unfortunate with this one. As I said, we actually, from the bottom down here where we had this area of consolidation, we took a long trade from this last week. The news, the fundamentals that came out stopped us. We didn't stop us. We took 1.5% profit on this, and this has gone on to run on and to have like a 6, 7, 8%. I can't remember the exact stop loss and entry, but a really nice trade this would have been. Unfortunately, we took profit early because it was too risky to hold the trade and lose the profit that we already had. But we have now reached this area of resistance on a daily. Well, I was looking at this yesterday. Was on a daily. We had this level. We had this shooting star here, as you can see here. But today we've opened up and we're retesting this level. You just go back to down to the 4 hour. Any 2 points any 2 points make a trend line. So we've got 0.1, 0.2. But I was expecting more upside. So price was down here before market opened. So again, like I just showed you, from the top to the support, box that off. And what I was expecting was price to come up higher. Why I was expecting price to come up higher? because I was expecting Aussie dollar to come down lower, as I've been explaining. I'll come to this in a minute, but as I've been explaining, since above these levels, I explained the short trade. Then I explained that we were going to be looking for a short trade from this point, but as you can see, it just moved away quickly without us. Would have been a very, very nice trade here, but it just didn't give us a chance for an entry. However, we did catch the Aussie dollar Japanese yen trade. Didn't get a chance for an entry here, but I've explained what we're looking for. Our first target was this third touch on the trend line, but I also explained I was expecting the break lower to come down and retest the last higher low. Very similar to Euro USD, coming down to retest the previous higher low. Because we haven't actually, many people will be jumping in the market now to take a short trade, but just because we've broken this trend line, we haven't broken the trend. We have to break this point in order to break the trend. So therefore, we know Aussie dollar and US dollar have inverse correlation. If I'm expecting more downside on Aussie dollar, I'm expecting some more upside on USD CAD. So what I was expecting for it was this to come back up, retest this trend line, or retest the top of this range. So 4 hours, very, very strong, but we're going to be watching out for this, guys. We're going to be watching at how we continue to act around here. If we can close strong, then I see some more upside, and we're going to come out to this outer trend line. If we can find some resistance, we could pull back down, and we might see a pullback down from here. We could see a nice intraday trade to pull back down. So we're going to be watching, keeping an eye out on this one. At the moment, looking quite bullish, so we're going to have to keep a close eye on this. But Aussie dollar, US dollar, going against the herd here, which is what we do and why we get sniper entries. Because most, as I said, people will be looking at this. A lot of people would have been buying here off the trend, but we know that this is a manipulation area, and we're expecting more downside first, especially before the turnaround or the big swing trade. Now, I do think we're going to come down to this level, and we're going to see price from this level turn around, and I'm looking at and expecting that we could see a lot of upside with Aussie dollar, US dollar. Now, what do we expect to see at these levels if we are going to turn around from what I've said? An area of consolidation. So I'll be watching price around this level. We have some Aussie dollar news coming up on Wednesday. That could be what turns the market from here. We might push down lower, but this is going to be a crucial level because this is a strong daily support level. High, 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 low, high, 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 low. This is a strong daily level and a strong higher low where price could turn around from here and do the unthinkable to many because it looks so bearish. And it's at those points where people really think that this is just going to dump, where the market will then turn around. So watching out for a possible swing trade from here. I'll be watching for that sort of consolidation zone around here coming up. But I'm loving seeing the Aussie dollar weakness at the moment because it's only helping our Aussie dollar Japanese yen trade. Now, let's look at this. We are 210 pips in profit on this one in a week. Great trade. I explained, and this is a good way to just cap off everything I've been talking about on this Sniper Sunday so far. I explained that once we broke a certain level up here, that it was all systems go for the short trade. We were already in it, but I explained that once this got going, then this was going. This is gonna go. I explained this. I said this multiple times last week and the week before, that should we break the support level shown, which I'm going to go over in a minute, this was going to go and this was going to go down hard. There's going to be a big drop to the downside. I called 74. We've now broken 74. That was a big call up at these levels. That was 200 pips from where we were. Me saying that we're going to hit 74. So that was over 200 pips. And it's been achieved. What a great trade. This trade, guys, has had zero drawdown. Once we took the trade, we didn't go into 1 pip of a loss. It went straight into profit and we've just been in profit ever since. So this is something I'm going to just cap off on what I've been explaining so far. But just quickly understand what we're looking at the moment. We've hit $74. As I said, even though we've hit that level, we can't look at taking profit on this just yet because of the situation with the news. Aussie dollar is weak because of the China connection. Japanese yen pairs are pushing down hard. This can have a lot more downside. We could come down even to around these levels, guys. We could come down to 73. We could come down to 73.50. There could be another 50 pips on the cards here. We're already 60 pips up this week from where we closed last week. We're 60 pips up in profit this week already. We've got about 4% running on this, and we've already closed 1.2%. This is bringing up our January to about 8 or 9%, and the week's only started. This week we're gonna be pushing into double figures for January. So it's been a good January so far. On top of the fact that we've had so much choppiness in the market. Now remember, we had this Euro USD trade that we took a short trade from here. We took a short trade, sniper entry. Sorry guys. 2 weeks ago we had a sniper entry there, if you remember. But we took 1% because of the news that came out. The news hadn't come out, it would have continued to come down lower, and we can see how nice this trade would have also have been as well. Unfortunately, I said the news came out, so we took some profit, but that was a perfectly cool trade. We had USD CAD as well, as I mentioned earlier. We had a perfect sniper entry down here, tight stop loss, and this pushed. Look at where USD CAD is at now. So we're pushing into double figures. We're pushing to double figures this month, and that's on the back of having some trades cut short. If we had held on to Euro USD and USD CAD, we'd be looking at probably closer to the 20% mark right now, 15-20%. But we were just creeping over to the 10% mark at the moment. So, as I said, to cap what I've been talking about on this pair, guys, I'm just going to delete these levels of support. You can see here we're clearly breaking this daily trend line. If we break here, and we can break this level of support, then there's lots more downside that's potential on this. So we're going to continue to hold this for the moment. But let's go to the weekly chart here, just to show how good this entry was. Look at that for an entry on the weekly chart. We entered on that weekly candle, that pin, that shooting star. We entered up high on that. It's a perfect entry. Now I just delete that. We got a shooting star followed by an evening star followed by a bearish engulfing. Now on my price action webinar, what did I explain about a bearish engulfing? Is that confirms the sell. We can use that on smaller time frames as well. If we see a 1 hour shooting star and a bearish engulfing, it confirms the sell. Shooting star, bearish engulfing on the weekly. So you can expect a big push down the following week. And we're seeing that sell off right now. We're now 220 pips in profit. Dropping down to the 4 hour or daily, let me just go to the daily. So what we're looking at here, we had this left shoulder, head, right shoulder. Now, as you can see here, on that right shoulder, what can you see from this push up, from what I've been explaining about today? We had a push up. We didn't push down straight away, did we? What we've done is we've had this airborne moment here. Now if I drop down to if I just delete this off and drop down to the 4 hour, this is what I mean about having patience, guys. Now we did actually take a trade here. So we pushed up, made a high here, and then we made a low. We had some spikes to the upside. We actually took a short trade on this. We waited, saw some spikes, took a short trade on this. We were 30 pips in profit, but then we came back to break even. Now, remember, you have to understand, and using this box range tool is very, very good. And understanding to have patience. So here we've made a high, we've made a higher low. We use the high, and we use the higher low, and box that off. Now we can see, we wait for price to come back up, and we retest the form of resistance here. What have we done when we come back up and hit the form of resistance? We hit the form of resistance here, and we've had an evening star formation. 1, 2, 3. Tweezer top, bearish engulfing. So here we've got a double top, 1 confluence. Tweezer top, two confluences. Bearish engulfing, 3rd confluence, and sort of evening star formation, 3rd confluence for a short trade. We also had Fibonacci that was working here. I believe it was the 61.8%. Was it from here? Or it was a bounce off to 78%. 4th confluence. To then 3 being a lucky number. Once we saw this push down, wait for this to push back up. 3rd rejection of this resistance. 3rd rejection is the 4th confluence. Left shoulder, head, right shoulder, 5th confluence. Bearish engulfing, 6th confluence, to look at taking a short trade. Bearish engulfing, confirming. Now, remember I kept explaining, if we could break this level, this was going to fall hard. I kept saying that last week. You can see here, and now you can understand why. Push down to the neckline, find a support. Broke through that. Strong breakthrough. Bearish engulfing. Once we saw that, it was nearly a dead cert that this was going to keep going down lower. Then we had a pullback, hit this as resistance, tweeze the top, bearish engulfing, continued this move down lower. Now we are just dropping. 78, nearly 230 pips on this, guys. Crazy profits, crazy move on this pair. And you can see here, this was having that last final push back up to the upside. Couldn't do it, couldn't break up, battled it out here, bulls and bears. Had that, the rocket had its mid-drift section, pushed up, couldn't push up higher. Had that moment where it just moved sideways, had some consolidation, started to move down slowly, but then once it broke down, boom, the rocket comes back down to earth. I think that's a very good way of explaining it to you guys. So now you can see here, I said we're dying, big sell-off, and we can see a big, even more selling off. So I'll keep you updated on that. NZD USD, another one, guys. I explained this many times last week. What did I say about the trend line? When we're very close to a trend line, we will 90% of the time hit it. We're finding support here, trying to bring people in the market to buy. Little move up here, trying to bring swing traders to make a buy here, but no. We know that if we're this close to a trend line, that we're going to come out and tap it. So we waited, and now we're coming to that level. Very interesting now, NZD USD is coming to that third touch on the daily trend line. We might start finding some support here. If we're gonna turn around and find some support, we can also, again, even at trend lines, expect that area of consolidation. So you might have an area of consolidation here, especially with this former level of support and resistance. Might have an area of consolidation, and then we might see a turnaround and push up to the upside, along with Aussie dollar, US dollar. Keeping an eye on that one, and we'll update. NZD CAD, this pair, I've been looking at this pair to look at possibly looking at a short trade. Like other Canadian dollar pairs, we are in a range. Here we can see, just boxes off again. We've got this level of support here. You see we came down, support, we came back up from that level of support and made resistance here. We do have to adjust this sometimes. See resistance. And we've just been bouncing around here, Now originally we were looking at some long trades, a short-term long trade on this to try and come back up. And as we've had a neckline, found a neckline here, is to come up and find a right shoulder to push up, tap this level before pushing down. However, on the Sniper Sundays I recorded but didn't go through, I was explaining that we do have this area of resistance here, and we come back up to the top of this range, and just being patient. We can see here now the 4 hour is struggling to break above this, and I was going to be looking at us taking an intraday short trade. However, the market has actually now gapped open, or gapped lower, sorry, and that's not on at the moment, but I will be keeping an eye on this and seeing if this does push back up to the top of this range, and if it does push back up to perhaps these levels. But keeping an eye on it at the moment, I expect it to come back down to sort of the bottom of this range. So keep an eye on that one. Gold, guys, is a very interesting one. So gold, I've been explaining that I'm expecting a big short on gold fairly soon. You can see here on the daily chart, quite simply, that we've had from here, we just keep rejecting the daily trend line. So we've had, just zoom in, we've had this daily point on the trend line, second point on the trend line, tried to break through, push back up. As we adjust that trend line, we can just see daily kept pinging off that level and pushing up. Now, I've been explaining that I'm expecting to push back up to the upside, because if we're going to sell off, we're going to sell off hard. And at the moment, we're having that push back up to the upside, as explained. We come back up to the 61.8% retracement level, and from here, I think we could sell off. Now, the only thing that's now changing my mind is because of the situation in China. Any time like this in the market, guys, any bit of panic, any sort of uncertainty, this virus could get out of control, could spread to different countries. People want what's safe. They don't want commodities, they don't want stocks. They pull all their money out of things that are risky and pull it into things that are safe. What's the most safest commodity or currency in the world? It's gold. So people pull everything out and put their money into gold. Now we can see since Friday, gold is pushing up and pushing up higher. Now we are around this 61.8% retracement level. We're in this zone here where it would be optimal for a short trade, previous resistance, and between the 61 and 78% retracement level. From here, I will still be watching to see if there is a short trade, because the market can often catch you off guard. People think it's going to keep pushing up higher. However, it could push to the downside. But coming back to what I just explained about drawing the range, is we can see here that price has come down and formed a support here. So it's could easily come back up to the top of this range and push up even higher, especially with the current world events. So keeping a close eye on this one, guys. We can see gold is pushing up. If gold is going to push up, USD JPY, Japanese yen pair is going to continue to push down. So it's a very, very interesting one to watch out for. But keeping a close eye on this here, and we'll update. There could still be that short trade coming if we continue to reject around these levels. Just look at this on a 1 hour. We can also see we've made a high here, now made a low. We come back up and retest these previous highs and fell to break up higher. We could be looking at taking a trade down. So I will update you on that. We'll update you on oil, but as I said, oil's in free fall at the moment, so I wouldn't be touching that just yet. And the US dollar, one of the reasons why I'm looking at these big swing trades, guys, here on the US dollar, and this is will show you why. So US dollar, the US dollar index, we can see here, if I just delete this off, we've been coming down, we've been making low lows, lower highs, lower lows, lower highs, lower lows. Now we're coming back up and making an equal lower high, which is here. Price is playing around and fluctuating with this at the moment. If we reject this level, then what we could see is a sell-off to come back down and make a new lower low. With this, another thing that we can look at here, Fibonacci retracement, is this was A, we came down, made a B, this was B, and we made a C retracement to the 50% retracement level. Double top with resistance. We pushed down and hit D, our D extension. So A, B, C, D. We hit that extension. Now remember, C becomes the new A if D is hit. So this being A, we come down, make a B. This is B, and now we're coming back up and we're tapping C, making a C retracement, possible C retracement, also a double top. Resistance, resistance. If we find resistance here and this pushes down today, we could see a strong push down on US dollar over the next coming weeks or months. So I'm expecting some fluctuation around here because we've had this push up. So remember, we've had this push up now. So I'm expecting some fluctuation around here. But should price be able to break this trend line that we've got here, let's put this on properly. You see we've got a trend line here. Price could originally first come back down because we've got this higher high, higher low, higher high, higher low, higher high on the 4 hour chart. The price can come down and test this higher low on the 4 hour. First could be the initial sell-off, because as we made a higher high, higher low, higher high, higher low, higher high, we're due to make a higher low soon. And given that we're at resistance, this could happen here. If we can break down to here and then even break through that, then it could be a big sell-off. So we just go back to the daily chart and we just put on that Fibonacci that I just showed you from A, B, and back up to C. Let's have a look at what our extension lines up with. We take this off. This is a good way to get a confidence for a target level. Put a horizontal line on the extension, and then we look to the left, and what can we see? We can see how it lines up with level of resistance, support, support, support perfectly. So this gives us good confidence that longer term, this could be where the US dollar is heading to next. So watching out for this, guys. If we can find resistance at this point, we may see a sell-off on the US dollar. So yeah, got to watch out for this, guys. We'll update you. That was Sniper Sundays. Let me know what you think. Talking about the price moving up and the patience, the airball moment with the rocket sort of example. Explaining to you guys about how to use the range. Let me know if you like that sort of information and if you find it helpful. Hope you enjoyed Sniper Sundays. We're looking for a big week. Some intraday trades, I think, early on as we wait for these bigger swing trades to develop and catch them. Speak to you soon, guys. We'll be updating as the markets gets moving and really starts to get going. I'll speak to you soon. Thank you very much.